I got
Dogs.
7 o'clock on here.
Oh.
You could ask him to move it.
All right, I'd like to call the Budget Review Committee to order. It's June 1st, 2023. We're in the Aldermatic Chamber and it's 7 p.m. Would the clerk please call the roll?
Alderman John Sullivan.
Here.
Alderman Ernest Jettie. Alderman June Karen.
Here.
Alderwoman at Large, Shoshana Kelly.
I'm here.
Alderman at Large, Laurie Wilshire. Alderman at Large, Michael B. O'Brien Sr. is present, and our chairman, Alderman Richard A. Dow.
Present.
You have a quorum, Mr. Chairman. Also in attendance is John Griffin, CFO, Treasurer, Tax Collector, and Cheryl Linder, Treasury Management Officer.
Okay. First item on the agenda is public comment. Is there anyone who wishes public comment? I see no one. None. Communications.
There are none?
Unfinished business.
None.
New business resolutions.
There are none?
New business ordinances.
None.
Alderman O'Brien.
Yes, Mr. Chairman, I'd like to make the motion to remove from the table R-23-125, which is the pending budget.
Okay, the motion on the floor is to remove from the table R-23-125. All those in favor signify by saying aye.
Aye.
Opposed? Motion carries.
And for the record, Mr. Chairman, Alderman Jettie has joined us.
Okay. So, this evening, we are going to be addressing the Financial Services Division, Department 118, 126. Also, in that same vein, capital improvements, the SURF and Department 81, other public safety, 159 and 162, debt service contingency and interfund transfers, 193, 194, and 198, and city special revenue funds, various. It's on appropriations on 242. So, Mr. Griffin, you want to provide an overview and dive into?
Certainly, Mr. Chairman, thank you for that introduction, and members of the Finance and Budget Review Committee. John Griffin, CFO, Treasurer, Tax Collector, and with me to my left is Cheryl Lindner, key member of the team. She's the Treasury Management Officer. As we did last year, we're going to provide some additional details around bonding, some of the challenges related to that, but I would like to start off kind of a high level from the overall budget perspective and capitalize on some of the comments that the mayor made when he delivered the budget and the comments that he made in the second night when he offered his proposed budget. So, and I'm going to go through some of the details relative to revenues and appropriations. So, as the mayor indicated during your Board of Aldermen meeting on May 9th, one of the key challenges this year is revenues. We were fortunate last year to get enhanced rooms and meals tax to about 1.5 million over what we expected. We got approximately 2 million, a little bit less, for the 7.5% of actual city contributions that we made to the retirement system for teachers, fire department, police department. And as you reviewed the fire department's budget last night and noticed revenues that seemed to be kind of odd, that was the amount of money that we got back from the New Hampshire retirement system for the fire department's share of that 7.5%. So when you review the police department budget next week, you'll see the same type of thing, and then also the education. So it was approximately $1 million back for the teachers and around $500,000 for the police and fire. So as you've learned, that's not coming this year as much as Alderman and State Rep O'Brien tried his best. From the House perspective, it was not a reality to give that relief back. The rooms and meals, the jury's out on that because they're still deliberating and still counting the revenues that have come into the state for rooms and meals. So we're optimistic that we'll get something similar, but as we budget conservatively, it's gonna be in the neighborhood of 6.5 million as opposed to 8 million. The other thing that Mr. Donovan, the COO of the school department, could probably elaborate next week is the state adequacy aid that seems to be bandied about every year, as the mayor indicated, and he indicated that Corporation Counsel Steve Bolton was attending those meetings up in, I think it's a Conval case, but the dilemma we face is that really doesn't grow much, state adequacy aid, unless they do things at the legislative level that provide more relief. So I'm gonna show you what that means from the standpoint of the city of Nashua. And what happened last year when they did some things with what's called the statewide education amounts that we collect on behalf of the state and use for education. The other item I'd like to talk about is, and we talked at length last year, we had the mayor here, we had Attorney Bolton on May 5th, 2022. And that's seems to be a challenging thing every year, which is what's called the spending cap for the city. So when the mayor and I were here on May 10th, I indicated that the 2022 inflation rate was 7%. And interestingly enough, the amount for for 2022 calendar for the state and local government implicit price deflator, that's 9.1. So things aren't going down. We've all experienced inflation in various shapes and forms. So as one of our residents came before you during your proceeding last week and indicated that he didn't really like the way I calculated the spending cap, I can tell you that we're calculating it the way we need to with regard to the city's charter. We talked at length last year, would it be great not to include grants? Would it be great not to include some of these other things? But as Attorney Bolton and I believe, we can't do anything different, even if we wanted to. When the charter was adopted for this particular spending cap, follow-on legislation from an ordinance perspective changed it dramatically. It subtracted things, it added things. And I did, in my 13 years here, I did go back and watch, I think it was televised back then, the debates that took place of what to include and what not to include. And I was actually thrilled when the state legislature basically said, include all appropriations, with few exceptions, county tax and a few other things, but made it easy. It wasn't like what I had to learn when I first got here in 2010, which is, okay, what's included, Mr. Fredette, what's not included? And I remember he said to me, I don't know if any of this stuff is legal, because generally you can't have an ordinance change in your charter. But in any event, I just want to share that I did the best of my ability to provide you folks an adoptable budget. You don't have to worry about what's going to happen down the road. I know Mr. T-Boone may want to try again. I think that's what he said. But whether I testify, the comptroller testifies, or anybody else, we know how to do budgeting and accounting in the state of New Hampshire. So I wanted to share that with you folks, so that's not in the back of your mind and you're worried about it. So with that, Mr. Chairman, I wanted to look at some revenues, get a little more detail if I may. So I believe the revenues are on your book, pages 9 and 11. So if we look at page 9, I just wanted to share with you the high-level numbers, most notably general fund, school special revenue, city special revenue, tax incremental finance that you reviewed with Director Cummings when you reviewed the Economic Development Group, and enterprise funds. And you'll notice that the general fund is 66.6 million proposed, where last year was 74 million. So you'd be kind of shocked that there's that much of a decrease, but I'll go into the details in a moment. Then if we switch to page 11, which is the detail of that 66 million. In the city of Nashua, we don't budget for real estate taxes. Matter of fact, in the charter, it's prohibited. But we do have to propose the appropriations and then the revenues to get the Department of Revenue Administration to approve our tax rate setting. But just looking at some of these line items, such as financial services, pretty flat when it comes to that. Police, fire, modest increases, decreases, but calling your attention to the fiscal '23 available budget, you see largely those are the reimbursements for the 7.5% contribution reimbursement. Public Works, that has that 1.771 million we got for bridge aid. If you get down to the education, you see that we had about 45 million that was budgeted. Right-hand side, you see 39, so roughly a $5 million decrease. What they did last year, if you're familiar with that concept of SWEPT, which is statewide education funding, they reduced that dramatically. Our share was generally 21 million. They reduced it down to 14 million, and what that would have caused is a big shortfall, but what they made it up with was enhanced state education aid, state enhancement education aid. So they went back, Governor Sununu and his team said it was a one-year deal, so bottom line is we're gonna be about $2 to $3 million less in state adequacy aid than we were last year. Now, some of the key contributors to state adequacy aid is the head count, which they call ADM, number of students, and also free and reduced lunch counts. Both of those are going down. So costs go up, head counts go down, you end up with some challenges on that end. But Mr. Donovan will definitely speak to that next week or the week after. So that, from a high level, I wanted to just share that the 66 million obviously is less than the 74, but we know that, and we're trying to plan for how to take this budget and then create a tax rate. But I just wanted to kind of reinforce what the mayor had advised back on May 9th, that that's an issue. And I'll get into the appropriations as we go forward. If anybody has any questions on that, I'd be happy to answer at this point.
Just a couple of general things up front. One, I think the way the mayor's budget was what percent?
4.4 approximately.
4.4?
On the appropriation side, correct.
Okay. And based on the spending cap calculation, if we were to stay under the cap is what?
Well, the cap, as you know, if you look at the actual resolution indicates.
I know it's in there, I just want to get the number.
Yeah, it indicates that the budget as proposed with all of the other appropriations is $43.7 million under the cap.
Okay. And the other question I have is, do we anticipate any additional revenues coming in? Potentially?
I'll answer that in two ways, Mr. Chairman. One is that we're hopeful that the state legislature will, through their deliberations, see if they can provide more in the way of state education funding, number one, and number two, that rooms and meals. If we could somehow, if this year was as good as last year, and I see Alderman O'Brien shaking his head from a representative standpoint, but We're hoping, but we're not counting on it. I mean, people have to convince people to
Now, I know.
keep us whole.
I know when you do revenues, you're conservative. The one that I noticed that was fairly conservative was automobile registrations. Last year was way over what we anticipated, and this year we're under. So are we envisioning that if things hold true the way they've been this last year, that'll increase? Because I think it's quite a bit of money.
Yes, as I go through the discussion of the financial services budget in detail, I will definitely address that.
Okay, any general questions? One? Oh, yes.
Thank you.
Alderman Sullivan?
Do we have an idea, timeline of when the state will let us know how much money we're getting? Are they on the same fiscal year as us?
They're on the same fiscal year, Mr. Chairman, if I may, but they let us know, believe it or not, just before the tax rate setting season, which is September, October. Because I think they debate and discuss as more and more information comes into them. So they're trying to close their books, and then the rooms and meals is what we're hoping for, is to get what we should get.
I think
And then-
Alderman O'Brien might have some, did you want to add?
Yeah, basically, every single bill has been filed, been vetted, and has passed the floor. Moved over to the Senate, to which the House bills, on what they did not agree with, are going to committee of conference. They may be totally eliminated or modified at that particular time. But there's no cavalry coming over the hill.
All set, Alderman Sullivan?
I don't know what that means. Cavalry. Does that mean zero, or does that mean?
Yeah, let me put it this way. You know, my party's a minority party. We would probably take care of a lot of these things, but there's other hidden costs. Wait till you see one where they come up with the funding for, how should I say, private schools. That's coming, and that's gonna cost us. So we'll see what happens in the committee of conference. But basically, the committee of conference may not change the landscape all that much.
All set?
Sure.
Alderman Jettie?
Yeah, thank you. So when we talk about rooms and meals tax, isn't that set, what the rooms and meals tax is? What's the unknown here?
Very good question, Alderman Jettie, Mr. Chairman, if I may. The rooms and meals percentage is set. And then there's a calculation where the state is obligated to provide us with 30% of some number. For the last decade since I've been here, we've gotten in the 20s. So we used to expect 40%, but never got it. So now it's set at 30, which is the 6.5 million, and we have a chance to get more revenues like we did last year if the state does better with regard to the collection of rooms and meals, and I believe it's slightly under 9%. You know, they were changing it a little bit, but it's approximately 9% of the rooms and your rooms and your meals tax. So that part is fixed.
Okay, may
Follow
I? Please, so help me understand this. So the tax is 9% approximately, and do we get the 9% that is collected from the restaurants and hotels in Nashua? Do we get that 9%? Does that come to Nashua?
So, Mr. Chairman,
Yes.
I would call us a donor city. We generate much more rooms and meals tax than we get back. So we're funding that whole rooms and meals pot. And then based on a calculation, and Cheryl, Ms. Linder has worked extensively with our counterpart up there, Ms. Heck, who's the NHMA person that attends all these meetings and keeps us informed, but we provide a lot more. So if we get 6.5 million back, I'm not even, it could be over 10 million that we're providing with our rooms and meals.
So may I continue?
Follow up?
So let's just assume for the sake of argument that the state collects for the hotels and restaurants from Nashua, send $10 million to the state. How is it determined how much is gonna come back to Nashua? Who decides that?
So it's maybe Miss Linda will jog my memory. What is the, is it assessed value or is it some other? Population. There's a mechanism that the city of Nashua will get it's in the 30% of that big pot that big pot number based on population. But given it's a big funding source for the state to dole out to all the cities and towns, so we're a contributor. But I can get more detail, but we did this exhaustive analysis when the legislature was trying to fix it, which fixing it means we always got 20% of something we thought we were gonna get 40%. But I do have some good statistics that I can provide the committee to show you that we used to get in the $3 to $4 million range for the decade that I've been here. Then last year, fortunately, we got 6.5 base plus an amount additional, which helped us. But there is a calculation at the state level when NHMA was advocating on our behalf to the legislature. We were able to provide our own unique experience over the last decade to help them come up with a better way of allocating the funds.
And just real quickly, when we get this additional aid from the state during the year, can you explain how it gets into the budget? Because it's not that direct. It doesn't just go into the general fund, does it?
It actually does, Mr. Chairman. What happens is, for example, this year we're putting 6.5 million into the rooms and meals tax line, and I'll show you that in a few minutes. We'll approve the budget, we'll be well on our way fiscal '24, and then in around September, October, we might get a communication from the state saying, you're gonna get more rooms and meals. They put that on our tax calculation. They literally say the line that had 6.5 is gonna have 8. So that's how we get the money. And that's how we apply it to the tax rate. And it's a revenue stream, so it reduces the tax rate other than it otherwise would be, but that's how the money comes in. Whenever you get state revenues, they put that on the tax calculation. I don't know if they trust us or don't trust us, but they literally put the state adequacy aid in, put the rooms and meals tax in. The only things we can adjust based on with more and better information is what we call the local revenue, which would be building permits, hydroelectric revenues, interest income, those types of things.
So,
Follow up?
yeah, I'm having trouble understanding. It sounds like there's a man behind a curtain somewhere who makes up numbers out of the year and all of a sudden announces, okay, this is what you're getting. There must be, these calculations must be according to some schedule. There must be some law.
There is.
Excuse me?
Excuse me, there is law, there is a funding formula.
Okay.
And what's interesting about state government and local government is sometimes you make up a formula that says the city of Nashua should get 40% of something, and then for funding reasons, you get 20. It's classic I know in Massachusetts, but you're right, Alderman Jettie, there's a formula that calculates. So my understanding, never having spoken to anybody up there that runs this, is the revenues come in from every single rooms and meals tax collected, goes into this big pot of money, accounted for properly, and then it's the allocation to the cities and towns that they need to send us. But they've underfunded us before the last 2 years, they've underfunded us. But I will get the committee the calculation. A lot of work went into it, to try to get the cities and towns a funding formula that they could count on.
So during COVID, the revenues were down statewide, but this is all hotels and restaurants statewide, not just Nashua. So Nashua, Manchester, Portsmouth are probably the big contributors. But when they add it all up, if we have a good ski season, for instance, and there's a lot of room and meal taxes from ski season, or looks like we're gonna have a really hot summer, so it'll be stuff from the seacoast. You know, they get more money in than they also do conservative revenues. So they get a lot more money in, then they'll have to figure out how much the cities and towns get extra.
Okay, and so I'll take one last stab. So I'm getting the impression that, so the rooms and meals tax is collected, you know, all the money from all over the state goes to the state. And then the state keeps a certain portion of it. Do you know what that portion is?
No, I don't.
Okay. And then the part that they don't keep, they then distribute among the cities and towns, not according to the amount of rooms and meals tax that they've collected, but according to their populations?
Correct.
Okay. So, you know, we've had discussions here about you know, local businesses, and one of the comments that was made was that, you know, the local businesses contribute, you know, the rooms and meals tax, you know, the meals that they sell, they collect that tax, send it to the state, and the state sends it back to Nashua. But I think the piece that we've been missing, or misunderstanding, at least I've been misunderstanding, is that, you know, no matter how much money the local restaurants raise through the rooms and meals tax, that does not affect how much Nashua gets. What affects the amount that Nashua gets are the number of people that are living here, not the number of people that are eating in the restaurants.
That's correct, but we'll get you the absolute calculation.
Okay. Thank
to
you.
close
Thank you
that.
for indulging me. I'm sorry.
Oh, no,
for
it's a big frustration for those cities and towns that have a robust rooms and meals revenue streams.
And if you could provide that data to Donna, so
Yes,
she can
exactly.
give it to the whole board. Thanks.
Right.
Any other questions for the general part of this discussion? All right, we want to move on to, we covered revenues, other general government,
Yes,
it's on
Mr.
page 94.
Other general government is a very interesting set of revenues and expenses. So on page 94, other general government captures our cable TV revenues that the city keeps. We had a placeholder for the opioid litigation funds that you actually appropriated into an expendable trust fund. We go down the list here, there's the traditional rental incomes, income from leased land to include the YMCA. There's a lease revenue from the YMCA. You have your 14 Court Street revenue that's been discussed. Heading down, the vendor discounts, I noticed that today, that needs to be about 1,500. We'll change that at the local level. And then the ones that tend to get a lot of discussion are the last two: interest income from 201 Main Street Financing Corp. and the distribution from 201 Main Street Real Estate Corp. That's related to the Nashua Center for the Arts. And in order to get the new market tax credits, the team had to come up with some sophisticated way of creating a income-producing enterprise, and that is the spectacle management contract that the Nashua Center for the Arts has to operate for profit. So to go through the numbers, so this is the revenue side, so we get $71,089 as interest income from the, there's a few different entities, as you folks know, from the Main Street Financing Corp. The other thing we get, we haven't gotten it yet because the center hadn't opened until April 1st, but there's what's called distributions to the city from 201 Main Street Real Estate Corp. So there's 201 Main Street Real Estate, 201 Main Street Financing. So before I answer any questions, Mr. Chairman, I'd like to quickly go to the appropriations on page 95. So on the appropriation detail, the city actually leases that building from what has been referred to in the past as NPAC. And that rent is made up of two components. One is the base rent, which for a full year is $500,000, and supplemental rent, which is an amount we pay so the NPAC can pay the real estate taxes. So if you look at that $689,677 appropriation, that's made up of $500,000 of the base rent and an approximate $189,677. Because NPAC doesn't have any money, so we have to provide them the funds to pay us back. So the revenue's equally expenses in that regard. Then there's another lease that was created. The team decided to have what's called an equipment lease for $165,000. So by these two numbers totaling $854,677, you're providing the mechanism for the city to pay the respective entities for these rents and leases. So if we hold tight the $854,677, and we look back at the sum of the revenue, the amount of the $189,677 is gonna be paid to our tax department, paying the tax bill. When you add everything together on the revenue and everything together on the expense, you have no gain, no loss. But the whole idea here is that the team and the city has created a for-profit entity so you can end up with tax credits. Because without it, you don't have a tax. The city of Nashua doesn't pay taxes, federal income taxes. That's a simple explanation, but as you all know, the legal department came up with that omnibus legislation that was, they had 3 people explaining it, great people. And doesn't make sense to the average person because it's like, why are you doing this? But New Market Tax Credits is a federal program that has a lot of regulation, as you know. So we decided to put it in other general government, so annually a person like me can come and explain it. So if there's any questions, I'd be happy to answer.
Any questions? Alderman Jettie?
Yeah, thank you. So just reviewing what you just said, we're paying $500,000 base rent to NPAC plus $189,677 as additional rent to cover the taxes, the property taxes. And then an additional $165,000 for the equipment lease. And then you say that's offset by revenue, but I look at the revenue and I only see 593,911 plus 71,089. That doesn't add up to the same amount, does it?
Correct. So if I may, Mr. Chairman,
Yes.
those two numbers that Alderman Jettie just referenced, those are the checks coming back to the city for what's referred to as interest income and a distribution. The other 189,677 is gonna be sent to our tax collection department and included in that revenue. So at the end of it, it equals.
Okay. And can I
Follow
ask
up.
another question? So, our arrangement with Spectacle, so, do we get any money from them? You know, they're selling tickets, they're selling, they have expenses, of course, but I'm assuming that their business plan calls for a profit. Do we get any part of that or not?
So, Mr. Chairman, if I may,
Yes.
we will. Now that we've celebrated the grand opening on April 1st, looks like the facility's doing fantastic, and the board has been seated. Part of that agreement with Spectacle Management calls for a fund to be established. It's in that Spectacle agreement contract. Fund needs to be established for monies just like you described to be put into it. They, per the agreement in their operating agreement, any expenses like under 1,500, they take care of. As the building gets wear and tear and all of that, I think they call it a Performing Arts Center Advancement Fund, but we'll be bringing in legislation that you folks will review and approve to bring those funds into that expendable trust fund, for lack of a better term, but that's where Spectacle provides those items, $1 for a ticket, percentage of concessions, things of that nature. And it's, the way it's structured is it will be closely watched by that board that was the board that you folks have approved. So that's coming. It's not in the budget because it's really not a budgeted item. It's money's going into an expendable trust fund.
All set?
Yeah, thank you.
Alderman Sullivan?
Thank you. You alluded to the average person, that's me. And so if I were just looking at this, which is, it's open to everybody, we spend $854, we make $665. That's the way I see it. But what you're saying is the delta is made up by the amount we don't write for taxes. That's basically the top line of it. So if someone stopped me on the street and said, this thing doesn't make us any money, I would say, not yet, it will. Because the other part of my question is, we don't have any forecast in here for revenue on the impact. That fund you said we were gonna set up, there's no forecast, there's no forecasted budget in here on that, right?
That's correct.
So essentially it breaks even,
Correct.
right now.
It breaks even from the appropriations that you approve and the revenues coming in for that purpose.
Yeah, okay.
The hope is that, or the plan is that there's a lot of increased economic activity brought into the city that otherwise wouldn't be realized. But you're right. There's no. They had to set it up such that the Spectacle Management was going to take a lot of the risk on their end and try to make a reasonable profit on it. If I remember at the beginning, there was going to be a fund that would pay a portion to have them at least break, They fortunately came to us, not me, but others, and said, we don't need any help from the city to make a profit on the operation. So And that's why it's important to have that board that you folks approve that can oversee it with income statements and all of that. That's an important piece. But what I talked about was setting up that advancement fund that will allow the city to get revenues from sales, and also, I think there's an event they have to hold. There has to be a minimum 25,000 annually put into this fund. But that will all come to light when we very soon put the establishment of that. If we can get it done, we'll hopefully put it in this June, and then the monies will come in. Thank you.
Thanks.
I've also noticed, going to the events I've gone to, that the restaurants are full before and after, so hopefully rooms and meals taxes are getting increased.
Right.
Wait an hour to eat. Any other questions for this portion? And by the way, when we originally had the people come in and explain this, the way this works with the tax credits, I think it took the Board of Aldermen a number of meetings before we even had some concept of how it worked. It's very complicated. I think Alderman Jettie, you were here for that discussion?
Yes, I was.
Alderman
I still don't
Karen,
understand it.
Alderman O'Brien, yeah. Yeah, so it's a very complex. All right, so we'll move on to federal, your section on page 96, financial services.
Sure, Mr. Chairman. So having studied some of the questions, or having understood some of the questions that are asked, on page 248 is the listing of the financial services members, 25 strong. We have 2 vacancies at this point. You recall that Mr. Healy, City Clerk Healy, indicated that he successfully filled one of his clerk spots with an individual, a very outstanding individual, and that individual has left us, motor vehicle clerk too. So we're in the process of recruiting for a motor vehicle clerk too. The other position is the top one, the accounting manager. We had lost a long-term employee about a year ago. Wanted to take some time to figure out what we need, and that individual has been nice enough to come back and help us out on a number of matters. So we feel as though we need that accounting manager at that very tactical level to do the accounting for the city, to complement the current comptroller, Rose Evans, and the staff accountant, Lisa Carl. So those 3 would be, so we're gonna hopefully post for that position soon. But I wanted to share with you, in similar fashion, that the police and the fire, DPW have talked about manpower. The GFOA, which is the Government Finance Officers Association, commissioned a study, very much needed study, to figure out who is gonna take our place as we retire and as people leave. People leave just like they leave a police department or a fire department. So they have a very nice study, very, very good study, saying that the old days have to kind of morph into the new days. There has to be a lot of promoting from within and training. You can't just do the old way of, requiring like master's degrees and advanced degrees for positions. That can certainly be done by cultivating the respective departments from within. So for example, Chief Buxton last night talked about needing an officer to do the type of training that's necessary, and I think President Wilshire was very direct in her comments, and we need to do the same thing. We have to train from within. You get 2 things. You get somebody that's excited to take on more challenges, and you get somebody to commit to the city because we're committing to them. So we actually this year promoted our long-tenured team of the accounts payable supervisor and the motor vehicle supervisor to managers, because that's what they do. On the motor vehicle, as Alderman Dowd mentioned, we're budgeting 11 million, we collect 15 million. And they do a great job because it's heavily state controlled. We have to send up the money we collect like almost when we get it. And on the accounts payable side, we have a good team there, and Mr. Rand has done a great job really helping the city avoid types of fraud that come up. So they're always looking at that, making sure they double check everything. So those individuals, and they were so excited to be promoted. It was one of my goals. I didn't list it on here, but those two individuals, Ms. Martell, motor vehicle, and Mr. Rand, accounts payable manager, they're outstanding, and they love doing what they do, which is great. As far as Rose Evans, the comptroller, you met the other night, Carolyn O'Connor, DPW Senior Finance Manager, Administrative Manager, Janet Graziano. She manages the kind of the financial affairs of public health and community services, as well as Director Sullivan's community development. And to some degree, Administrative Services Director, Mr. Cummings. So we have 25 people. I think we're in great shape from a manning perspective, but we do need that accounting manager position filled. What's happened to us is we've kind of made things, I mean, I hate to use this word, we made it look easy. I mean, but it's a lot of blood, sweat, and tears. And when we brought Treasury Manager, Ms. Linder, in, she really rounded out my team, because I had a, as we all know, Mr. Fredette was tough to replace, but because he had so much knowledge in his head. But I'm going to go over some more things in this budget to tell you that, you know, the successes of the team. But wanted to share with you that that's kind of the team we have, and it's good to see people that like to come to work and work hard. So thank you very much for that. As far as what we asked for in the budget, there were no mayoral reductions from what we asked for. So on the appropriation side, we put forth what we thought we needed. You've heard Mr. Cummings speak to it, a few others. We're trying to, what I call, wean ourselves off not putting things in the budget and trying to get added through escrow, because you're really doubling the accounting, quite frankly. But I think we're going to be successful this year using that strategy. We didn't have to do a lot of it in financial services, but I'll point out where we needed to. So if we look at the revenue, you have your high-level revenue summary, but on the detail, you'll see at the very top on the page 96, you'll see that the property taxes make up the available budget and the year-to-date. So we're pretty much spot on with regard to billing and collecting the 242 million. We'll have a similar number next year. It will grow as the budget grows and the tax base grows, but that's where it fits in with the available and the year-to-date. If we go down to the other taxes, we have what's called pilot agreements that Corporation Council's Bolton negotiated with some of the hospitals. So we have that. We have a small one with the National Housing Authority, but we're pretty consistent now with the 1.1 million in pilots. The other two lines are interesting in that pre-lien, so we bill the individual, the homeowners, businesses, and if they go delinquent, this is the interest amount that we collect pre-lien, before we lien. So that's the interest on cost and taxes. And the tax redemption interest is, I guess people don't pay us when they should. They pay us before they're liened. We lien them, and they come in and say, geez, I don't want that lien. So that's the amount we collect after the lien. And we do fairly well. You can see that we've collected through March, 530,000 on interest. The other thing that's happening there, and you folks know that we're more aggressively taking ownership of property where the taxpayer is just not interested or unable to, more not interested in paying us, so we're systematically trying to go after those folks. And what will happen with that is when we auction the property off, we'll get the money and we will, that will help this revenue stream too. And more importantly, somebody may be interested in buying the properties that want to use it and enhance it and pay taxes on it. So that's kind of the strategy there. As far as the next page, as Alderman Dowd mentioned, we budgeted 11 million, weren't quite sure of, we want to actually have surplus in this at the end of the year. This particular line has served us well. Brought it down to 10 million through the tax rate setting, and then we've collected through March the 10.9 million. So that's heading towards the 14 million sweet spot. Then there's other types of fees that are below that aren't material in the grand scheme of things. We go into the intergovernmental revenue, meals and rooms tax. So you see that we budgeted the 6.5 million. We were fortunate enough for the state to let us know before we set the tax that we were gonna get an additional $1.5 million, so that's that 8.09 million. And as you can see, the year-to-date revenue, they actually paid us the same amount they told us they were gonna pay us. So that was good. But as we conservatively budget, we're putting in that 6.51 million, which is really the 30% of the calculation that I'll send you, or send to Donna, and she'll send it on to you folks. So that's how that affects us. Now, if we go, if there's any more questions, then we get down to interest income. This is where I want to have a really tip of the hat to the lady on my left here. She has done an outstanding job really managing, hounding, whatever you want to call it, the banks. Because, as you know, banks loan money, no problem raising their rates, but it's been a marvel to see the efforts of Ms. Lindner being on top of these banks to get us the best rate. And it's manifested here with $2.1 million of collected interest income through 3/4 of the year and growing. And where that helps us all is that is surplus. So as we search for ways to, in quotes, buy down the tax rate, that's certainly gonna help us. That's not used essentially for, although it could, for escrows, because escrows are appropriations not spent. This is the revenue similar to the adding the revenue to the excess motor vehicle revenue surplus to help us with that tax rate. So, tip of the hat, I didn't realize it was that big, but it adds up. They kind of slowly give you the increases. It's kind of like, you know, they'll be more than happy to jack up your mortgage, but they slowly give you the increases. But it's been good to see, so thank you very much, Cheryl, for your efforts there.
You certainly brought in more than her salary.
Yeah, she's not a grant writer, but she's pretty close. The other items here, realized gain and loss, unrealized gain, we mostly invest in CDs. We're gonna get the money in the CD. It's just that we're required to get a valuation of the assets periodically. And there's unrealized means you haven't even sold the asset, but we have to book that. So that, don't worry about that too much. And then just one item on the bond premium. When we do sell bonds from time to time, we get premium. And if they don't apply the premium, as Ms. Linda described, against the bonding, it can come in as revenue. So that's a reasonable amount for the amount that we sold, the 257. So
Does everyone understand what they're talking about? Okay.
So that pretty much covers the revenue. The appropriation at the high level is, we have a mixture of unaffiliated staff and UAW staff. And the big increase we have is the wages full-time, similar to the other folks that have come before you. Some small increases in items, such as the accounting and the auditing, consulting services. The tax deeded property, there's a reason for the 10,000 being gone, as Director Cummings indicated, he's taken that in the risk area. Historically, we haven't tax deeded too often, and we had 10,000 in there, and that covered the lawn mowing and things like changing of locks and things like that, but we really hadn't taken it, so as Director Cummings indicated, it would be much more robust amounts needed to manage those assets. Did want to call your attention to software subscription services. So if you recall, when information technology came in front of you, there was this budget called technology maintenance. And we came up with that kind of at the 11th hour, so I want to apologize that 175.7 should be reduced to 25.7. The 3 subscriptions that are in here will move to the technology maintenance, so at some point you could feel comfortable, in the wrap-up, just reducing that number to 150, from 175.7 down to 25.7. As far as the other items, as I mentioned, employee training and certification, dues and memberships. Postage is a big thing that generally goes up for us each and every year. And getting into the office supplies, we do have a large staff that needs supplies, and thought we needed a slight increase there. And then every now and again, we need some furniture and fixtures, so we have that in the equipment section. So the $2,757,159 will be reduced to $2,607,159.
We would have to reduce it by a motion and a wrap-up.
Correct, yeah, you'd reduce it, but I wanted to flag that for you, that you should feel comfortable to do that.
So if anybody's looking for something to add to the budget, it can be done on this line without increasing the overall budget. Alderwoman Kelly?
Can you just repeat what line? I missed
Oh,
it,
okay.
and I just want to make sure I have it. Thank you.
So if we look at 55 other services, the third line down. The account number 55,620. So it was 3,600, went up to 175,700, but the IT team and Director Cummings felt that capturing these software subscriptions would be better served under the what they now, not telecommunications, technology maintenance.
Okay.
Now, just one other point on these subscriptions, we were trying out, are we gonna keep them and all of that? And that's an example of buying things under escrow. Doesn't appear in the budget, then you put it in the budget, it's like shock and awe. So putting things in the budget that you need operationally is a very good thing to do, and that's what we tried to do with this budget. So what will happen is, as we go through that escrow process, our hope is that there won't be any or limited operational escrows. And that preserves more money for putting things into capital projects or expendable trust funds that are designed for those kind of rainy day situations. Thank you.
Alderman Sullivan?
Thank you. I had a question around your head count. Just looking at last year, I just need clarification, please. Last year you had, I'll round up, 23 people in financial services. This year you have 25. You had mentioned that added a couple of managers. I see the accounts payable manager. You didn't have that position last year. You had an accounts payable supervisor, so that's really no net gain. I'm seeing you added a motor vehicle clerk too, so that's a +1. And is that vehicle registration manager the other +1? So I'm just trying to find out where the
Yeah,
two came
great,
from.
great question. I appreciate the question because I want to explain what we did this year relative to last year. So, and I did send out some communication because there was a little bit of confusion, but historically, what we tried to do on the head count is we tried to put in the different departments the pro rata share of some of these positions. Meaning, I'll take Mr. Roche, for example. Clearly, she's 50%. You were the one that really got to the bottom of it. She's 50% hunt building, 50% economic development. But I didn't get to you on time, so you have two people in economic development because that's where they're charged. So what happens in our accounting system is we charge them there. That's their HR 11 record. And then we split fund them. And in kind of prepping for this and having a number of meetings with Chairman Dowd, he wanted kind of like, what do these people make as the position, not where they're charging things. So we got rid of the split funded stuff. So the accounts aren't gonna be apples to apples or apples to oranges, but the two managers were supervisors. So Ms. Martell was the motor vehicle supervisor.
In the past, especially in DPW, it was very hard to figure out what somebody was making because they were a third to this department, third to this department, third to this department, and nowhere did we add them all up. So I wanted the positions and how much they make and who they report to, but some of them are split. So as far as a head count, it may not really be a full head in that division that's listed on there. It may be split money-wise, but not reporting-wise.
And then just my other clarification, but you straightened it out, is that your total appropriations are 2.607 million? Because we're taking out
Correct.
150 from the software subscription line. Okay,
That is correct.
all right.
Again, when somebody makes a motion to do that, right now it's in the book.
Yep.
So, Alderman Jettie?
Yes, thank you. So, on that point, you're saying that we can eliminate under 55, the software subscription services of 175,700?
Well, what you're gonna do was to decrease that number by 150,000.
Okay,
So but the reason for that is there's $25,700 worth of subscriptions that they actually need within our department. Where the other three subscriptions are ClearGov, Workday, and we hope to bring some technology into payables. Payables is a big, it's only getting worse with fraudulent activities. So we're hoping to kind of get some type of insurance. It's an interesting concept, but we'll bring that in once this is approved, because we don't have the funding to bring it in, so we're thinking of an August. But Alderman Jettie, 25,700 left, 150 out, makes this budget 2,607,159.
I believe sometime before we wrap up with budget, we're gonna get some kind of a IT presentation on what they wanna do, but we haven't got that yet. Alderman Sullivan?
Thank you. I have a few questions.
Follow-up, Alderman Jettie?
Sorry.
I did, but
No, go ahead.
if you can come back to me.
Sure.
Okay, so could you send that to us in writing so that we, send us a memo so we don't
That will,
eliminate, forget it?
yes.
And I did have another question if I could. On page 97, you pointed out that the interest income, thanks to Ms. Linder's great efforts, year to date is over 2.1 million, but you're only budgeting 700,000. Why aren't you budgeting the 2 million?
It's a good question. Once again, this is an area that historically we have budgeted conservative, but it's a very good question. I'm gonna ask Ms. Linder to address some of the communication she's had with regard to interest rates, projections and so forth. So maybe,
Could you pull your microphone closer to you?
thank you.
Is that better?
Yes.
Can you hear- Okay. So Cheryl Linder, Treasury Management Officer. So hound is kind of a strong word. I'm persistent, but but when I speak with the banks, we have I am always looking to them to see what they're forecasting. Right now, the Fed is looking to possibly raise a little, the guidance that I'm kind of getting is the Fed's looking to sort of raise a little bit more, maybe 25 basis points in the fall. But then there's no guarantee that once they meet in September, that they're not going to either hold interest rates or start to reduce them. It really depends on the financial climate. So we tried to budget a little bit more conservatively this year because we just don't know right now what's going to happen with interest rates come December and March of next year. So it's always better to be conservative with that. We have, and I want to thank John for all his guidance too, because he's been great whenever I come to him and ask for his opinion. We've looked at a lot of different things, and based on our investing guidelines, we've tried to do some short-term investments because those are very good right now, 5% for 3 months, which has been great. So we've been trying to take advantage of some of those short-term investments and just sort of ladder them so that we have access to our cash, but we're maximizing what interest we can get right now in the short term. So we just want to keep it conservative. If rates do start to fall, they can fall quickly, and we don't know what that pace will be, and the Fed has given no indication of that yet. So we might be up for a little bump in September, but then after that, we don't know what the rest of fiscal year 24 is going to look like. So we decided to keep it more conservative, much like the motor vehicle revenue. We try to keep it conservative and then, try to what do we say? Under promise and over deliver. That's what we try to do. But we just don't want to be put in a situation where if rates do drop consistently every time the Fed meets next year, that now we're trying to chase what we've projected. So we just like to be conservative with that.
Follow up?
Please. So when you say you're trying to be a little conservative, I see a $1.4 million worth of conservatism here.
Mm-hmm.
And my concern is, you know better than I do, that our residential taxpayers got hit pretty hard with the reevaluation.
Yes.
And we've had, as aldermen, we've all heard people tell us their horror stories about how much their taxes, went, in some cases, how much their taxes went up and how painful that was.
Yes.
So, I appreciate, the guidance that you people who are experts in financial matters, and, I'm not. So I appreciate your wanting to make sure that, what you predict is gonna happen.
Mm-hmm.
But I'm concerned about, this is just one example, I think, of many in this budget where we're predicting our revenues to be much lower than we hope they're going to be. But for every, like in this case, this 1.4 million
Mhm.
that you're predicting less than what than what we've got this year so far. And that means we've got to raise, maybe I don't understand this, but in my mind, that means we have to raise $1.4 million from the taxpayers. And then, this money ends up in the city coffers. We take it from the taxpayers, we put it in the city coffers, and then at the end of the year, we've got this excess money, that we now, historically, we don't give it back, or we give very little back to the taxpayers. Most of it we use for projects that we didn't think we had the money to fund. So, that's why I'm concerned about these things. So, what are your thoughts about that, Mr. Griffin?
Mr. Griffin?
It's a great question. What's interesting is we buy a little time with the two things. One is the results of the prior year, and secondly is as we watch what Ms. Linda was explaining, like what is gonna happen at the federal level. So when it's revenue surplus, it's much easier to put it against the tax rate. That's why we always hope that motor vehicle revenue would generate about 4 million in surplus, and that's why we anchored to that 4 million in surplus. The good news here is we're gonna have revenue surplus, hopefully 4 million motor vehicle, hopefully 2 million plus. We'll put it against the tax rate. And then what we'll do is in October, November, we'll have July, August, September, October results, and we'll have better projections. We can adjust the revenue. I know it's, we don't budget for the taxes, and we kind of just get the tax rate set, and then we collect the taxes with the final bill. We actually are buying ourselves a lot of time to see in the fiscal '24, what the results are, which is different than, I think, towns or other communities, that they have to decide what the tax rate is. They have the same timeline, but they almost have to anchor in their revenue so it's affordable, so they can buy things that they need. I want to make sure I'm not confusing the situation, but my thought is we're going to probably increase the 700,000 in our tax rate calculation, in addition to using the surplus. We can do that, and we'll have almost 6 months of results that will help us. I can contrast that to the significant amount of appropriations not spent we had last year, where you've already appropriated the money, and now we're trying to reappropriate. Well, this is on the revenue side. So I think, looking forward, I think we're fortunate that we have a healthy revenue surplus that isn't affecting the tax person right now, and isn't shackling you folks to not be able to appropriate things that you think we need. It's like you'll take everything into consideration. That's why I wanted, Alderman Dowd has requested, I want to spend a lot of time on revenues. I think where they have tax caps and tax levies and things, and I'm familiar with Massachusetts, you gotta kind of know what the number is right when you decide the budget. Here we have a little bit of time. But no question, it's not gone unnoticed that your concern of, leaving right now $1.4 million on the table and potentially another $500,000 as we get the numbers in. So hold me to that, and then we'll communicate and say, here's what the numbers are looking like. They're all on the financial statements that are printed, but when we get into the fiscal year, the hope is that the rates maintain. We haven't talked about bonding yet. We hope the bonding rates come down, but I don't know if that's gonna happen, but it's not lost your concern and thought. So hopefully that helps, but we do have time to do the right thing when it comes to using revenue surplus.
Okay, thank you.
Alderman Sullivan?
To that point, I went down the rabbit hole last night, and I was looking at financial statements. And you can, let me know if I'm wrong here, but I looked through April, fiscal year 23 through April. I see that we've spent, I understand we still have 2 full months left in the fiscal year, but we've spent 260 million and change, and we've made 324 million and change in revenue. It says here we're, according to my math, about $64 million over in revenue. Maybe I'm looking at the wrong sheet. Because I also had another note here that said we're 3.8 million over budget for revenue, so I don't know which one I was looking at, but so my overall question is, do you, I guess as an offshoot to Alderman Jetty's question, do you or can you forecast how we'll finish the year in revenue for 23 as we head into a new fiscal year? Do we have an idea of what type of surplus we'll have?
Well, while he's looking that up, remember, we did get 2 million from the state after the budget was set, so revenues were up. You know, and it doesn't look like we're gonna get that 2 million this year, so.
No, I understand that. I'm just trying to square away where we are in the current fiscal year. Where we got it, I think, is immaterial. I just want to make sure that I'm on the same page here.
Right, so, Mr. Chairman, if I may, through May 30th, I'm going to Lawson Financials and printing this out, but we've got about almost 6 million of surplus. And hopefully we grow the motor vehicle and the interest income, so we should have a very healthy surplus. So we're going revenue to revenue, not revenue to expenses. So we should have appropriations not spent, which creates the escrow. But we will have a very good revenue surplus in 2 specific areas. One, well, actually 3. One is the motor vehicle. Second one's the interest income. Third one is hydroelectric operations, and I know Director Sullivan has sent an email through Donna as to the reason why we reduced in the tax rate setting process the 1.178 million down to 778. So that's a $500,000 there, 2+ million on the interest income, and hopefully 4 million plus on the motor vehicle. Those are the local revenues that we have used historically to buy down the tax rate and also grow the unfunded balance of the city.
I have a follow-up.
Follow-up?
You mentioned escrows, and I know that we did pass a resolution, and according to what I saw, there were about 9.3 million in escrows. And through April, we may have more current numbers. To date, through April, we've spent about 6.3 of that, meaning we haven't used it all. There's about 2.5 million left against that 9.3 million. What happens to that money if we don't spend it?
So one of the strategies that we had for this year is to, again, wean ourselves off of the escrowing for operational costs. Hopefully I get this right, but your voice, your choice, where Director Sullivan put that in his budget. That's an example of historically the usage of, it's a year-over-year program, but the answer to the direct answer is if an escrow isn't used as of June 30th, it either has to re-escrow or it lapses to surplus. So my hope is, unless there's an absolute need to, on the operational side, to need an escrow. My hope is it just lapses to surplus and it covers the embedding of the former escrow expenses in the budget. So we're gonna have a few things going on. One is the revenue side to buy down the tax rate. And the second part is let some of these escrows lapse so that it creates surplus that we can use to help the tax rate as well. But I want to make sure, is that unless they're capital, so there's escrows for capital,
Right.
that we generally re-escrow. You've
Yep.
got great questions, you're looking, and we're gonna get to it when I go over the capital improvements, but you're really appropriately honing in on available balance of, we budgeted a minimal amount last, especially capital improvements, minimum amount. Now all of a sudden we have 9 million. You're gonna ask another question, you're gonna ask a good question, and most of it's the opera things that haven't been bought yet. Well, I'll go over all of that, but that's, generally speaking, capital we roll over through escrow, but where you folks have to appropriate is reappropriating funds from someplace to a new place.
All set?
Actually, I have one more question, and it's very pointed. If I vote yes for this budget right now, the way it is, how much are taxes gonna go up?
Well, as the mayor indicated, the first night when he talked about revenue, you're 3% on the tax rate before you even start looking at the budget, if those things don't come in. And then he also, so the next night, on the appropriation side, he said he did the best he could to bring a 4.4% increase. So that's on the budget. There's tax things going on, there's county, then he mentioned that maybe the potential dilemma of the county tax going up more than normal. Trying to remember everything he said, but those are like, when he and I get together, it's always those numbers that resonate in our brains, and it's like every 2.5 million of either savings or spending is 1% on the tax rate.
2 years
So-
ago, we projected a 7% tax increase, and we ended up 3.9.
I think so, yeah, there was
So
some
we're at
things.
we're at 1807 right now, right?
Right,
And so if you add 3% to that, I'm at 1861.
yep. Well, that's 3% on not having the revenue to shore up what we did last year.
No, I understand.
But yeah, yep, exactly.
Yep, okay.
All set?
Yep.
Anything else on financial services? If not, we'll go into SURF. Not the SURF, SURF.
I think of the beach days when
Yeah.
I come up with
They
that.
would have been a good one.
Not that I'm dating myself.
SURF is on 236, by the way.
So SURF is interesting because as we indicated last year during the pretty drawn out, appropriately so, $3 million in SURF, you can see that we're hopefully gonna shore up our fleet of police vehicles, park rec, solid waste, streets, engineering, school, and others, 5.18 million. So this is a process that these teams get together with us and they review their SURF list and they come up with things that they need to replace. They do take a hard look at things that they might not need to replace. So it's a very interactive process. The reason why the fire department is not on this is because they're okay with what they were allowed in the fiscal '23, and certainly Chief Buxton and his team were very appreciative of the two large bonded apparatus that you folks approved. And we'll get into that when we go into the bonding, but this is a good listing of the items that each one of these departments brought forth last year. Really hoping that the board would approve that, excuse me, that 3 million in escrow.
So, yes, Alderman Kelly.
Thank you. So my question is around, the new, I won't call it regulations, but the move to wanting to do a lot of passenger vehicles, energy efficient wherever possible. I'm assuming that these replacement costs are for replacing it with a gas car currently.
So, if I may, Mr. Chairman,
Yes.
this takes a lot of work to do, so this was done, mostly done well before the ordinance. But as Director Sullivan has indicated with his sustainability team, they plan on looking at the combination of electric vehicles versus fossil fuel-driven vehicles, powered vehicles.
Having talked to all the division directors, I think the sustainability committee needs to meet with each one of them to find out which are reasonable. And the other thing that goes along with that is not too many of our sites have charging stations, so that's that added expense. So I think the sustainability group needs to come up with a plan that we can start implementing, and it may not be in the '24 budget. Yes, follow up?
By sustainability group, do you mean the energy and environment committee?
Yeah, that's what I'm
Okay,
sorry.
because there's a sustainability department, which is something completely different. I think that we've talked about this ad nauseum, so I'm not gonna go on for a long time, but I think that the intent of it was to start thinking about it, that it wasn't gonna be an instant rollout, and we have had discussions in that committee about where we can target low-hanging fruit and how we get the infrastructure in. But I just wanted to make sure that we start to think about it as we look at SURF going forward, and I understand that this work that was done way before the legislation, so it sounds like we're gonna be doing a sustainability plan, those types of things, that this will get updated at some point in the next.
I know the
Few months.
school department is willing to go to, they have a lot of cars that
Yeah.
people get around, and they're willing to go to it, but at the new McCarthy School, we're paying to put the infrastructure in the ground for charging stations, but not the actual cost of the charging stations, which is gonna have to come out of somewhere as soon as that group figures out where they're getting the money.
If I could reply,
Yes.
and I think that, passenger vehicles are the easy, low-hanging fruit. We, as I'm sure we'll talk about, have an energy efficiency fund that doesn't have a whole lot of money in it, and I've been asking how it's been funded in the past and how we might start to refund it for things like this, because that infrastructure is gonna be really important.
Hmm? Yes, Ms. Linder?
So, if I can just add one piece to that, when we were going through the list, because we've seen such an increase in the price of the vehicles, this list does reflect, we met with each department, and it does reflect the most current pricing that they had available. So you may see during the course of the year, I know the electric vehicles or hybrids sometimes are a little bit more than the fossil fuel, but you may not see, because we have updated these prices, that much of a difference. So, I don't know what the anticipated timeline is to go fully to the electric vehicles, or if it's gonna be possible this year, but these prices were updated when we were creating the budget for the department, so in the spring. And then we did use an escalator for the pricing as well, to cover the time between when those prices were given to us and what they possibly could be with what we're seeing for increases. So we're not working off of old pricing or anything that we thought these vehicles would come in at. This is most recent.
Alderwoman Kelly?
Thank you. Question to either of you. Is anyone keeping track of sort of the federal funding and programs that I feel like they're getting changed every day in terms of, incentivizing some of this switch over to energy efficiency? And I heard there's like 50-page documents dropping so is there someone in this city that's keeping an eye on that? And is there a way that we can capitalize on anything that might be coming to cities to help with that turnover?
I believe Ms. Brown is
Yeah.
charged with that.
So the sustainability department is always looking into those programs. And whenever one of us on one of our listservs, or if we get a newsletter from the government, we're all signed up for different email lists. So when we get anything concerning energy or grants, we send it over to Doria and Deb, and to Pam, our grant writer. So the city's very good about sharing information, so if something comes out, we'll send it to them, and they're great about looking into it. So I would connect with them to see where they're at with the most recent programs.
The other thing is, we used to split a grant manager with the school department, now the grant manager's 100% here.
Yeah, I'm excited to hear that.
I don't know whether the school department's adding a grant person or not, but we'll see when they come in.
Thank you.
Any other questions on SURF? Yes, Alderman Jettie.
So, this list, okay, so I was gonna ask a question, and I'm looking at the headline, and it answers my question. Fiscal year 2024 planned SURF replacements. So this is what the city is planning, these are the vehicles the city's planning on replacing in fiscal year 24, right? And so so are you asking, is there a budget item for this, $5 million somewhere? Where's this money coming
So,
from?
Mr. Chairman, if I
Yes,
may,
Mr. Griffin.
so as you recall, last year during the escrow process, you approved 3 million of this to put into the fund. The fund has about $5 million in it. What we need to do is two things. We need to buy the remaining vehicles we were planning on buying for fiscal '23, but through the escrow process, this would be another area that would need some funding. We used to transfer monies in the transfer section that I'll get to when we review it. But from time to time, it would be used for other things. So in other words, we have a $500,000 transfer, which is a drop in the bucket. Some of our team, some of the Alderman team members would say, I need that for the fire department or the police department. So what the mayor and I do is we just use appropriations not spent and ask you to reappropriate it to serve. It's just a reality of things, because it's not looked at as a, I don't know what kind of object, like a needed object, so you just buy it later. I mean, it's kind of a tough way to fund this stuff, and this is, I mean, you talk about capital projects, which we will, but we've deferred, the team has systemically deferred buying things such that you're butting up against a wall that the capital replacement requirements over the next couple of years is about 15 million. So you're right, Alderman Jettie, where's the money coming from? Fortunately, we started with 3 million. We have a little bit of balance from the year before, and then we're gonna need to put more in the escrow process. Because we're not gonna buy all this stuff like, you know, July 1st. We'll have enough money, we'll have enough time to get the money into the fund to buy it.
So there is an overall SURF comprehensive plan, which has all the vehicles and when they'll be replaced, whether it's 25, 26, 27. And it's all based on the years of service that they were projected. You'll notice most of these track, some are way overdue for being replaced because they've been deferred and deferred and deferred because we didn't have enough money in the SURF account. So, but there is one that has all the vehicles in it. Everything that's earmarked to SURF is in that plan. And they just picked the ones that we're gonna buy in '24.
Can I,
Follow up?
please? So, so it sounds like we have from what the chairman is saying, that we have a schedule. So in '24, we need 5 million to replace these vehicles. And we know in '25 how much money we need to replace the vehicles that are scheduled to be replaced in '25, '26, et cetera.
Yes, so, Mr. Chairman, if I may, as
Yes.
Ms. Linder indicated, we did a massive update of pricing, looking to the future. Working with the police department, solid waste, wastewater, park rec, all those teams. So the number, like I mentioned, it's like 5 million a year over the next 3 years to the same type of vehicles get replaced. timely. SURF works from the standpoint of you're quantifying what number you need in the fiscal year that you're replacing. Prior to the 2010 fleet study that Mayor Lozo did with a team, they used to fund like the percentage, used to be a calculation, every single vehicle had a percentage of how long it was gonna last, and you'd fund a portion of it. And some of the veteran budget people say that's a great way of doing it. I don't do that, like with my personal vehicles. I like say, I'm gonna buy the new vehicle maybe 3 years from now. I'm not amortizing the current vehicle and all. They both work effectively, but what happened was, because of budgetary constraints, especially during the expending cap era, you were constrained, you couldn't possibly fund it enough. So that original funding plan, which called for about 3 to 4 million annually, went down to $1.7 million, $1.5 million, because we wanted to keep all the people employed that we needed employed. And that was an area that we had, and you folks probably recall the old funding of the benefits fund for healthcare and medical. Couldn't possibly fund that. We had a healthy balance, and we just weaned our way down from 19 million down to 3 million. Same types of things. It's not great, but we've been able to get by, and I know we're gonna talk about capital improvements next, but this is another area that needs, it'd be great if we could put 5 million in it annually. Just out of the budget, just budget $5 million.
So I have
But
a
you
question I think I know the answer to, but I'm gonna ask it anyway. When we have a vehicle, I won't mention which department, that gets totaled, and the insurance outside company pays us in through risk, and we buy a new vehicle, do we update that in the SURF plan?
We do.
New position, okay. I thought we did, so I'll be sure.
Yeah. We try to maintain the fleet, try to recognize when we grow the fleet for good reason, try to identify grant-funded vehicles that we buy. You know, there are a lot of good notes in the SURF
Yeah.
schedule. Thank you.
Alderman Kelly?
Thank you. You started to answer one of my questions, which is, we had this conversation last year around SURF and how it's kind of been funded historically. A question that just came to my mind now that I would be interested in, I don't know if we can do it or not, but maintenance is one of the big things that's kind of on my mind, right? So if we keep these longer than we are anticipating, are they costing us more in maintenance, and can we account for that in SURF?
Mr. Chairman, if I may, you wouldn't want to account for it in SURF, but certainly when you go through the deliberations of whether to replace or not, especially the police department, they keep excellent records on these pursuit vehicles that they don't want to use them for more than 100,000 miles, so they don't want to trade them in too early, but they don't want to keep them past 100,000 miles, and they'll be in next week, which would be great. But you wouldn't fund that in the SURF. The SURF is a replacement of the vehicle itself, the purchase price, and in the budgeting process, you heard it the last couple of days, especially DPW, the fleet manager came in and said, yeah, the prices of fixing cars are going up, fixing vehicles are going up. So you handle that through the budgeting process, through their operational budget.
Yeah, that maintenance fee is in each one of the divisions.
So if I could, I understand that it's in each department, but I'm just wondering if there's like a way that we can historically follow it, because some things are going up, like the fleet manager said, but also some things could be going down if we switch to, energy efficient electric cars. You're not doing the oil changes, that kind of thing. So it would be interesting to have a place where we could kind of see it across the SURF or across the fleet.
It would be, the fleet Mr. Chairman, if I may, the fleet managers would have that data.
Okay.
And especially the fleet manager at the police department.
Okay.
Any other questions on SURF? Alderman Jettie?
So, after hearing what you said, I mean, it would seem to me that, that the city should, if we know it's gonna cost X amount of dollars, I know some vehicles have a 20-year life, some of them have a 3-year life or whatever. But, we ought to be able to determine what that is. We ought to know how much money we're gonna need each year. And, what you said about, each year, if you have a bulldozer that's gonna last 20 years and it costs, $200,000, I don't know what they cost, but, and then it would seem to make sense that you would put, part of that, 1/20th of the cost, you'd set aside that amount each year, so that when in year 20, you'd have the money to replace the budget. I know you said that we used to do that, and we ran into problems with the budget, the budget cap or the tax cap. But, isn't that the right way to do it?
Mr. Chairman, if I may, a couple of clever tricks were done municipal budgeting decades ago, and that's where the funding of an apparatus, let's say, to have the fire department have a skin in the game, they'd fund some of it in their operating budget. That's what was going on. When I first got here in 2010 and I was trying to analyze some things for Mayor Lozo, I'm like, what the heck? Oh no, they used to fund part of the cost of the vehicle. Let the department have the skin in the game. They got rid of that. They did the 1/20th spending cap. They couldn't fund, what goes is the vehicle. It's kind of like our own personal life. Would I love to have a brand new car? Yes. Am I gonna buy one? No. But here, Alderman Janney, definitely, 20-year life, $200,000, put X amount away and fund it. Don't say you're gonna fund it, fund it. So what Mayor Lozo and I think Lisa, Director Photo, said it last night, they got together and said, this is crazy, like we get chicken wire and duct tape and everything else on the old refuse trucks, and they did a nice job getting us out of that. But this is up there with, I would say this is definitely up there with the challenges we have with deferred maintenance.
I've had that same question over and over again over the years, and we look into it, and for us to get SURF in a financial position to do what you want to do, we'd have to bond several millions of dollars, because there's not enough money in there. And you couldn't do that, and you couldn't allocate that in a one-year budget because you can't afford it. But if you analyzed all the things in the comprehensive SURF plan, to get that amount of money that we should be putting aside every year, including inflation, millions, maybe tens of millions.
Correct, and I would like to say that when it comes to the fire apparatus and the refuse trucks and those large excavators over there at the landfill, the plan was always to bond them. That's from some people would say SURF doesn't work because you have to bond some of these. But you need to bond. I mean, the people that are gonna build those apparatus for 28 months, they want to get paid like now. And they give you a decent discount, but the money, Cheryl's not gonna be able to invest it because we gave it to them. But SURF has always been a combination of non-bonded vehicles and bonded vehicles. So this big SURF schedule that Alderman Dow references, we know what we're gonna bond, and we know what we're not gonna bond, and we know, I'm just explaining that you're gonna need $5 million in cash.
Yeah, I was just gonna say that plan outlines things that are gonna be bonded versus things that are gonna be paid cash out of SURF.
And just as far as like looking at it, studying it, is there another way to skin the cat? It's just, there isn't. I mean, we would have done it if we had to. And I'll get into it with the capital improvement stuff, but for a city with $316+ million operating budget, to have less than $1 million of capital improvements doesn't quite seem right to me. It seems low. And I remembered years ago, I looked at the city of Cambridge, Mass., which is a whole different animal. They have a $600 million operating budget, and they got like an $85 million capital budget. So when Alderman Dowd wants to meet with Director Sullivan and figure out a different way of looking at things, and Alderman Jettie, you and I served on the CIC, it's frustrating to have a myriad of issues that we debate on the merits, because it's not on the money, and it really can't pick much. And Cheryl, very sort of direct, Treasury Management Officer, Ms. Linder, as part of her presentation, is gonna show you what we're planning on bonding this year. And there's a laundry list of stuff, so. It is a struggle, it's a challenge, so we have major capital items that are challenging.
So it dovetails into our next section, which is capital improvements. Unless there's another surf question. Okay, capital improvements is on page 224.
So, I asked Ms. Linder, I have an online version of the CIC report, but I'm familiar with these reports, and you folks received a report for the CIC's efforts, and it's a lot of great projects. But really, our budget is somewhere between 800,000 and $1,000,001. So what the mayor decided to do this year, if you look at that page 224 on the right-hand side, he's funded certain items. Those are the nominal amounts that we're budgeting, and on the next page, or close to it, is the listing of the disparate projects that we're recommending. And looking at the fiscal 2023 available budget, most of those items are the opera funding amounts that you folks approved. I mean, it's, you know, administrative services, it's got 500,000 for the backup servers, for Mr. Mizovich, the police, 650,000, that's their new data program that you can ask them next week how that's coming. Fire department, in that amount is the Opticon upgrade and also the alarm systems throughout the stations. Community development, Mr. Director Sullivan provided the breakdown of the $1,887,000, but the big number is the $1,005,000 for the Library Plaza to match up with the $3 million grant they got. And the National Airport Authority, we all know that whatever these numbers are, they're 5% of the total. So if somebody's gonna pay 95% of the bill, it's very difficult not to provide the 5%. So we have 812,000, and that's what's being proposed.
You missed one important one,
The education?
schools. $100,000 is totally inadequate. We have a situation now, we gotta replace some elementary boilers at $300,000. And, you know, unless we wanna increase a bond somewhere, we're gonna have to fund that. So somewhere along the line, that number's gonna have to grow. It's either gonna come out of surplus or wherever, but that number is, we have, I forget how many, $18 million or more in school buildings, and $100,000 deferred maintenance is ridiculous. There's paving at National High South, just fixing some of the pavement. They usually get out of deferred maintenance, they don't have enough money to do that. If we let it go too long, we'll do the entire school paving, and trust me, that's a lot more expensive. So, any questions on deferred maintenance? I mean, on capital improvements? Alderman Jettie?
So if I understand, do I understand this correctly? We're talking about a total of $812,778 for capital improvements for next year? The whole
That's
year?
correct.
Do you know, Capital Improvements Committee, do you know what the total of their A-rated projects was?
Just by way of background, Mr. Chairman, Alderman Jettie and I, we serve with a good group of folks that review all the proposals, and the departments take them very seriously. A few years, I must admit, I was getting a little frustrated, and I called Sarah Marchant, Director Marchant, and I said, do we really need to do this? And she says, yes, John, very important for grant opportunities. Plus, we need to from the state. You have to have a capital plan, so. I said, okay, I'll give it the old college try, and there I am. But the total, because Director Sullivan's group does a nice job summarizing everything, into long-term and short-term. So let's see what the numbers are.
And again, some of the things in that plan get bonded because they're large numbers.
So there's $8.1 million worth of A-rated projects, and A is defined as essential. And there's $11 million worth of short-term rated projects that are A-rated, so 19 million total. The desirable items are 18.7, acceptable is 51 million, deferrable is 96 million because it's long-term. So when we use the current software and we total up the board, I always point out, it's hard to get this all back at once. So the city hasn't figured out a way of not bonding things and investing in the infrastructure. You heard it last night with the fire folks. But it costs money. I mean, if we had a get out of jail free card, it would be like, we need 5 million for the SURF. If we use the City of Cambridge analogy, we probably need 25 million a year budgeted in capital improvements. But we're in this because I mean, not to steal Alderman Dowd's thunder, but it's like we build stuff and we don't have the maintenance costs on the heavy side. I remember being in one of the municipalities I was in, and Governor Romney sent up his economic secretary in a Jaguar, and he says, we're not giving you any money unless you figure out a way to maintain the stuff. They were Bain Capital guys. I mean, that's what they were, right? So, but we haven't been able to find that balance because we've been chasing a spending cap since '94. We've had recessions. When I got here, we were coming out of recession. I mean, the 1-2% increases, that's not reality now, unfortunately. You can't be signing 4% collective bargaining agreements for all the right reasons and think you're gonna have a tax increase of 3%. Then you add all this other stuff, and it's my little town too, same thing. You know, you let the bleachers go until somebody gets hurt, and then you fix them and all of that stuff. But not sure what it is, but we gotta the first thing is we're weaning ourselves off of escrows for operational costs. Now, the next thing is to fund things, but people have to be on board.
So 2 years ago, you'll remember Alderman Jettie, we had $100,000 in deferred maintenance, and they had to replace a pump for $90,000. Everybody had a concern about a pump, $90,000, and I took everybody on a tour. The pump's as big as Volkswagen. It has to go up 4 floors with fire water. And so we had to increase that deferred maintenance, and we keep getting the same thing every year. Last year, I got questions on last year's, but we had a high school that we built, and it didn't even last 20 years, and it was when we tore it down to build a new school, you say one wall and stairwells. In fact, we had to do it over with, it just tore the whole thing down. That's because we didn't maintain it. We had air handlers in that school that was rusted shut. Because they didn't have the maintenance money to take care of it. The new schools, which are the new high schools, were now 20 years old, look brand new. Because we built them to last, and they maintain them, so. Just a pet peeve, Mike.
So
Yes,
can I
Alderman
follow
Jenny?
up on that? So, I mean, you're the financial expert, you know, I have an economics major, but that was macroeconomics, you know, so I can argue about guns and butter.
Guns and butter.
So it just seems to me that, you know, when you, I mean, you know, the city knows it's going to, for example, you know, we're gonna have to buy a fire engine, let's say. And we know these things, you know, have a limited lifespan. They give out, and, you know, at some point in time, you gotta replace it. And so, you know, when I hear somebody say, and I don't mean to, I'm not arguing with you, I'm just thinking out loud here. When you say, well, you can't afford to put aside the money each year so that in year 20, you've got the money to buy the fire engine. I'm thinking, you know, if you take 1/20 of that money each year and you give it to Ms. Lindner to invest, you know, she makes money with that money. And so over the 20-year period, you know, because you put aside, you know, 1/20 of it each year, she invests it, you make money, and so you've got the money you need when it comes time to buy the fire engine. The way we've been doing it is that we wait until year 20 when you have to buy a fire engine, and you go out and you borrow the money with a bond and buy the fire engine, then you're paying back that money over the next 20-year period, plus interest, you know, and plus the other financing costs that go with buying it with a bond. So I'm not a financial expert, but it seems to me the first way of doing it is more economical than the second way.
Again, very reasonable questions. The reality is there's a lot of vehicles. And just prior to I get here, they did the fleet study, and they said heavy fire apparatus, refuse trucks that needed to be bought, and some of those large excavator purchases that Superintendent LaFleur talks about, those were always going to be bonded. What we fell short on is the other 500 vehicles that should have been 10-year life, put 10% in the year, 5-year life. I was here when inflation was sometimes negative, but 1%, that's the spending cap. So we had a cap, and several members appropriately, you know, whatever they felt their beliefs were, but they thought that was akin to an override, Proposition 2.5 override, like in Mass. When in fact, you're literally abdicating your duty to properly fund the city. But I lived through that. I mean, I always lived through that. And the $3 million that Mr. Gilbar, when he left in 2010, thought we were gonna put in years 11, 12, 13, 14, 15, never happened. And I remember when the mayor first came back and we were sitting over here, and Alderman Siegel's like, what are you guys doing? You guys are crazy. You need to fund $3 million. What are you gonna do? You're gonna override the cap? I mean, I don't wanna bash all this cap stuff, but I'm sitting here saying I got 1% growth and a spending cap, and I've got collective bargaining agreements. Back then, people were getting like a 0.5% increase in their pay, And while we're at it, we're gonna double your contribution to your healthcare. Thank you for working for the city. I mean, that's what happened. I was part of it. We had unions, that rightfully so, they basically said, that's not negotiating, I'm just gonna hold out. Interesting stuff, but you don't have enough money, you don't even have enough money, right? Then I do some research, and back in the early 2000s, I find that the first thing that Administrative Services Director Maureen Lemieux did, side by side with CFO Carol Anderson, was they said, Mayor Streeter, we're gonna basically we're gonna exclude debt and capital items from the spending cap calculation. So that's why you had, I watched last night, Chief Buxton, that's why you ended up getting rid of like 20 people at the fire department, because you couldn't afford to keep them. Plus, you didn't have the equipment. So I found a memo from from Maureen Lemieux and maybe Mayor Streeter, and it says, we're gonna do no surf purchases with the exception of pursuit vehicles. So when they say 2005 was like the worst year ever, it was. We haven't done that per se, but we haven't been able to catch up. And now you get inflation, heavy inflation. So the cost of things have gone up dramatically. And like a 6% increase now is akin to a 3% increase halfway through my career here. So but getting back to the apparatus, they knew back in 2010, there's no way we're gonna save. If a fire truck is gonna be $1.5 million for a ladder, it's gonna last 15 years, we're not putting in $100,000 a year in the savings account. Because you got all the other stuff. You got, I think I owe it to you, Alderman Jettie. I'll show you the schedules. It's like big numbers, and it's by division. Take it very seriously, and it's just the funding is somewhat, I mean, you can't go whole hog and, like say, do that one-time correction, but you gotta plan, but everybody has to be on board. I mean,
We
that's
definitely
kinda
have to take a look at the way we do capital improvements, but it's getting late. I'd like to move on to other public safety hydrant fees.
Oh, sure, yeah, we can definitely do that. So the hydrant fees, we pay Penachuk for that fee, that's for essentially, it's making sure that the hydrants are working and if you turn them on, they have water in them, but that's a tariff rate. PUC bills us that monthly. So that's what that is, if there's any questions. And then the
Question
next
on
one,
hydrant fees? No? Right.
then the next, street lighting,
Street lights.
we made the investment, that bill used to be 800 to 900,000, but we made the investment with the LEDs.
Could I ask what page we're on?
Oh, I'm sorry.
120.
Funny.
Yeah, 120 back. Hydrants are 121 and the street lighting is 120. We're on the hook for the maintenance part of the lighting.
Any questions on street lights?
We can go to 222 if you want, Mr. Chairman. I take care of those first, then we'll get into the debt. But 222 is the contingency.
You say 122?
222.
Okay.
So a little bit of explanation here. We generally budget $250,000 for general contingency. Historically, we've had that police grant that's funded through here, the city match. This is where the mayor has put in a contingency for cybersecurity for $300,000. And what we generally do is we take the contingency for negotiation, in this case, library and AFSCME, and we put that into the contingency from negotiation into this particular account. And then when you approve the contract, we transfer it back to the department. I will say that in the fire department's budget, I left in the contingency because it would have looked really crazy. It would look like you were cutting the fire department. I know you didn't address it specifically last night, but there is a salary adjustment number that's like $782,000. So if there's any questions there?
Yes.
Please,
Sullivan?
thank you. The cybersecurity contingency of 300,000 seems like a very round number. I don't know if we're gonna get that presented to us on what makes up that 300,000. Is it software security? Is it people? Is it both? Do we know?
It's probably a combination of things. As Director Cummings indicated, it could be a staff, could be a contract, something like that. But I am part of the team that's figuring it out, but I know people are trying to figure it out.
I think that number may have come from their consultants as a ballpark number but we won't, until they give us a briefing on it, we won't know if that's the final number.
Yeah, this seems very low.
But 300,000 is in the budget at the
Okay.
moment.
So if we want to go, Mr. Chairman, to the page 223, which is inter-fund transfers.
Yep.
This is where you have your Board of Aldermen is appropriating to transfer into these different funds. So starting from the bottom up, transfer to parking, that's where you take the parking enforcement collections and you subtract the operations of parking enforcement, and then you put that into the parking expenditure, expendable trust fund to spend things like the parking study and the garage, the 2 garages, things like that. Just moving up quickly, downtown improvement, that's where the Board of Aldermen approved the 100,000 amount to be put in annually. Police overtime, there's a 0 there because you just approved for final passage the 185 from the escrow into that fund.
Mhm.
The housing is that traditional 10,000 that comes from one of the revenue streams we get. I can't even remember which one it is. The housing, the 10,000. We get 10,000 from some entity, but it goes into that same trust fund, 10 million in it. Not sure there's any other questions. I mean, you have your cell tower revenue going into Holman Stadium, Mine Falls, David Dean's skate park. But I will call your attention to that transfer to city retirement. That 500,000 is a placeholder, and we're getting towards the end of the year where we're trying to figure out if we need more money to put in there. The purpose of that is so each individual department would not be funding their final payouts to some of their, to all of their employees. One year, I think it was my second year here, that number was 1.9 million people worth of people retired, police and fire.
Any
The Court
questions?
Street,
Oh,
the Court Street, that's the 50,000 we talked about last year. So was that, any questions?
Any
Yeah.
questions on interfund transfers? Yes, Alderman Sullivan?
Thank you. I'm just looking at the financial statement from April again. We started the year in the City Retirement Trust Fund, 180,000. We moved 500,000 into it. Then we transfer into general fund of 641, so now we have a closing balance of $41,081.13. So we tapped into that fund to help offset
Yes.
city retirement, okay. And then we're just gonna bolster that back up again.
Yeah, but we may need some additional funds in there with some end-of-year retirements.
Okay, thanks.
So it's a kind of a, you try to ballpark it, but
Sure.
sometimes we have to spend more than $500,000.
Yeah.
Thank you.
Thanks.
Any other questions on? All right, debt service?
Debt service, if it's all right, Mr. Chairman, Ms. Linder has prepared a slide deck that she'd like to review with you folks and kind of set the table for some debt service discussions.
Ms. Linder.
Okay, Cheryl Lindner, Treasury Management Officer. I just wanted to go over a little bit. I know we usually give you a bonding presentation in May. We decided to combine it with our budget presentation this year and just change our presentation just a little bit. So let's see, we're gonna go through and see if that works. Okay. There we go. Okay. So the state has a debt limit for municipalities, which is actually higher than what we have in our charter. So I just wanted to show that RSA first. So the state has an RSA that has municipality debt limit for non-school not to exceed 3%. For school, not to exceed 7%. So those are the debt limits per the state. If we look at our Nashua Charter, and it's Chapter 5, Subchapter 1 in the charter, municipal indebtedness, our charter actually has stricter limits. So our charter says that we can't go above 6% for school debt, and we cannot go above 2% for city debt. So what I wanted to show here is where we're at with the school debt. We wanted to do a five-year timeline. Now, this timeline does go through the end of fiscal year 2022. And we did do a bond sale early in fiscal year 2023, so I'll go over that. But I did just want to show that where we are currently is the lower line, the blue line. And we're about 700 million below what we could borrow for schools based on our base valuation. So you'll see there's a bit of a rise in 2020. That's when we started to borrow for the middle school project. Before that, we were pretty flat with just doing some school repairs and bonding as needed. But then when we started the middle school project, we had to start to borrow in significant amounts to cover the costs for that. Oops. So this one you'll see on the city side, we're a little bit closer, but we're still about 100 million below where our limit is, our debt limit is. So this is our plan to borrow in the fall. We're gonna try to get the bond sale done before the Fed meets in September. So our estimated time frame is gonna be August at some point, either late August, early September, but we wanna get in before the Fed meets because, as I said before, we don't know what they're gonna do with interest rates. So working with bond counsel, that was the recommended time frame. If we look at the list, there's about $40 million for school improvements, and those are school improvements. These are all resolutions that were passed last year. And it's a combination of the middle school, the middle school project, and then there's the improvements to Birch Hill and Main Dunstable. There's some safety improvements, and then the Franklin Street School. So we end up borrowing as we need them for those projects. So we get the approval first, and then as the funds are needed along that timeline, we borrow when we need to. So that's what's gonna be in there for schools. You'll see a couple items for the fire department below that. So the fiscal year 23 apparatus was approved. And then the bottom two for fiscal year 26 and 27, the chief was here, Chief Buxton was here talking about that new motor that's gonna be coming, and we wanna stay with the older one just to avoid any issues with the first series motor. So those were approved to bump up to this year. The radio communications that Mr. Mansfield came in to talk about, to replace all the radios, we're gonna borrow for those. The police command center vehicle, the mobile command vehicle, that's going to be borrowed. The hydroelectric improvements that Director Sullivan was talking to you about, we're gonna borrow those. And then on the DPW side, we have a dozer that we're gonna be borrowing for, and the remaining cost of the DPW building. If you look ahead to fiscal '25, based on, speaking with Alderman Dowd and his projected timeline of when those school improvements are gonna be done, we're gonna borrow half this year for the safety improvements and for the improvements at Birch Hill and Main Dunstable, and then we're gonna borrow half in fiscal year '25. Those projects are gonna be done over the next 2 years, and so we're gonna be able to spread out that borrowing. So hopefully when we do the second half, interest rates maybe will have come down a little bit. For right now, we're just gonna borrow half for those 2 projects. The bottom section we put in a placeholder for projected projects. So we've been averaging the last few years between $40 and $60 million a year for borrowing. That includes our paving program. It also includes any sewer improvements that we need to do as part of the paving program or for maintenance. And then just other capital projects that come up that need to be done, or any large vehicles that we need to bond for. So we try to put a placeholder in there. It may not be 40 million next year, but on average, we just want to be conservative in what we put aside so that we kind of have an estimate. Are there any questions so
And
far?
all those ones on top that you talked about, they've already been approved by the Board of Aldermen.
They've already been approved and all of the resolution numbers are in there. Yeah, so that is the planned borrowing right now for the August-September timeframe. And those first payments won't come due until fiscal year '25, so we do get a year grace period with them. And depending on what we get for premium, some of that may be rescinded. So I spoke about the July 2022, which was the beginning of fiscal year 2023. We did do a bond sale right at the beginning of it. Those numbers were not included. I didn't include fiscal year '23 yet. We're still in it. So we did borrow these amounts. It was 40 million non-taxable. Most of that was school projects. There was about 6 million on the city side, so we're still way under that debt limit. We borrow $7.5 million a year to continue the paving plan of action. The sewer infrastructure was 5.4 million, and then we did have a taxable bond that we sold as part of the School Street project, and we sold that as taxable because in the future, if we make any revenue off of it, we had to, that was the way we do, if we make revenue, we sell it as taxable. If it's just a straight improvement, we sell it as non-taxable, but bond council recommended we sell that as taxable. And then as I spoke about September 2023, we're going to be selling non-taxable for 51 million. 1.5 million is gonna be taxable, which is the hydro. We'll borrow another year for paving. And then the riverfront project, Director Cummings has told us that that is going to be starting. So $21 million was approved overall, and we are probably gonna borrow a third of it, unless he tells us that he needs more. So we'll probably be borrowing a third each year for the next 3 bond purchases. So just in closing, our AAA rating allows us to get the best rate possible when we sell our bonds. Our bonds are very attractive to our bidders. We usually end up with premium for that reason. Our audits continue to have unmodified opinions, which helps with our credit rating. And as you can see from the graphs, overall, we're below the debt limit that's allowed by both the state and the city charter. So we're in a good shape, in good shape with our debt.
Questions? Alderman Sullivan?
Thank you, great presentation.
Oh, thank you.
So I just want to make sure that I understand first of all, I want to dive in a little bit to the law. And understanding, it's 6% of what? It's 6% of the assessed valuation of the schools.
No, it's 2% and 6% of our total, our, base valuation. So that's the total value, so, of, our property. So it's 15.1 billion.
Okay,
Yeah, so that was our last valuation as of 2022. We don't have the 2023 number yet.
so it really has nothing to do, because I was running numbers, I went 10 years back
Yeah,
last night. It has nothing to do with the general fund. It has nothing to, it is not in relation at all to how much we spend. Like my home budget,
mm-hmm,
I don't budget it that way.
mm-hmm.
You know, I budget to cash flow and all that to say, okay, I've got to pay this amount on my mortgage and credit cards, car payment, whatever.
I do the same, yes.
Right. But here,
Mm-hmm.
we hold it against the valuation of the property.
Mm-hmm.
Actually, the state does.
Huh, okay. Because when I ran the numbers last night, and it was funny because you were saying 6%, and I had to reread it because it is 6% of our budget.
Mm-hmm. This is,
But it's nowhere near of the valuation,
We
I mean,
ba-
as the
yeah.
law reads.
right, we base it off of the valuation.
Yeah.
Which is the 15.1 billion.
Interesting. Okay.
Alderman Jettie?
Yeah, so, following up on that, on the graphs that you have,
Yes,
showing, the first one, the school debt schedule,
yes,
and you've got, the red line is the 6% and the blue line is the current.
yes.
Okay, so, what percent is that current number?
Percent is the current, it is, I can figure it out and get it to you, it's below the debt limit
Okay,
we
that's
have.
fine.
No, I have it from a spreadsheet, so I don't know if it says particularly on the spreadsheet. I have how much we have to give. Yeah, unfortunately, that's not the calculation that we have, but I can get that for you.
Okay.
I'll
and-
get that for you.
And
Provide that to
also,
Donna.
Yeah, I will. I can do that for both. I'll do it for city and school.
yeah, right, that was my next,
Sure.
thing.
Yep.
And, so I have one more.
Follow up?
So you talk about taxable and non-taxable, so
Mhm. Yes.
other than one being taxable and the other being non-taxable, what's the difference? I mean, we don't pay taxes,
Right.
I mean, the city doesn't pay taxes, right? So
Right.
what does that mean?
So the interest rate on the taxable is just a little bit higher. And it just means that it's something that we're bonding that we can potentially make money off of. So when we're bonding for a fire truck, we're buying the fire truck. If we're bonding for a parking garage, we could make money off the parking garage. So they're gonna tell us if we have to bond improvements to something that we can earn income from, then they would sell that as a taxable bond, it would be a higher interest rate.
And to whom is it
Mr.
taxable?
Mr. Chairman, if I may,
Yes.
it's the investor.
Mhm.
So the investors generally like to buy non-taxable municipal bonds. And we're just being a little bit conservative. The 2.4, the 2.5 million is the garage that we put underneath a for-profit enterprise. It's not the parking garage and then they're gonna charge people things. It's not that. There's a profit motive. It's like when we came up with the Performing Arts Center, we sold that as taxable because we didn't know, we knew we tried to make it a profitable enterprise. So we always go with the bond council in their review, and they're very diligent. I mean, even putting solar panels on top of schools and other buildings, you have to go through this analysis to see if the for-profit aspects are de minimis relative to the total cost. It's a little bit tricky, but it's the investor that's buying the non-taxable, because it's non-taxable to them. If it's taxable, they're gonna want a higher interest rate. That's why the rates are different, but they're not too different, but they are more expensive
We're
than
not-
taxable.
Okay, so
We're not paying any money for the solar panels. That's a public-private partnership that doesn't cost the city anything.
Correct.
Unless
but
we
the-
decide to
but-
buy 'em.
But what happens is somebody's making money,
Somebody's making money.
and the calculation that we have to go, this used to drive treasurer for debt crazy, because they'd ask them, every time we put solar panels in,
Yes.
it's the company that's selling us the solar panels that are making money on a municipal building. That's where the taxes come in.
the
But we
bond-
don't pay any taxes.
Yeah, we don't, because the bond is actually taken out by that private company. not
Correct.
us.
Yeah, they're buying our bonds,
Right.
yeah, they're giving us money for the bond, correct. Yep.
So the bond's not part of the city bond.
Yes.
Alderman Jettie, follow up?
Yeah, just to clarify, so
Yes.
a taxable bond, so if I buy a bond and, so I'm getting interest from that bond, I pay a tax on the interest. That's a taxable bond. If it's non-taxable, I get the interest tax-free.
Correct.
Okay, thank you.
And by the way, this year, '23, we just finished paying off Nashville High School North. It's off the books. Next year, you notice that we're paying off South. So that $170 million project is off the books. We sort of dovetail that with the middle school, but the middle school is nowhere near as expensive as the two high schools.
Just in time to start making repairs on the high schools.
Yeah, but they're in great shape. There are minor things that need to be fixed from time to time, yes. It's a pretty large building. Yes, Alderman Sullivan.
Thank you. Would you mind going back to the bond schedule slide?
Sure,
Thanks.
of course. Oh, it gets,
Oh, that was a bad question.
it gets stuck.
Your clicker broke.
It's it, oh no, what happened? Oh wait, there he is.
I'm doing it up here.
Oh, you're doing it?
So which one do you want to
Oh,
go
that's
to?
Okay, so
why.
let's go to the grid.
Dueling clickers.
That one?
There's an eye chart.
There you go. I tried to make it
In our-
bigger this year. I don't know if I succeeded or not. I tried to. How did I do? I don't know.
If that's bigger, then I'd hate to
Okay.
see smaller. In our previous discussion about capital improvements, correct me if I'm wrong, 8 million was in Schedule A.
For
So why not, is there Schedule A improvements in there, or why don't we just bite the bullet and just put it in there?
I've had that question before.
That's what, Mr. Chairman, if I may, that's what happens. When Director Cummings comes into the Infrastructure Committee and tells you that you can get by with 5 million, but you really should spend 10, that can be bonded. That's in the bottom part of Ms. Linda's analysis, and what we're trying to portray to you folks is, the thing about bonding is you gotta pay it back.
I would much rather bond a capital improvement than I would a vehicle. I mean,
Right.
we've had this discussion before. I mean,
Yep.
you bond something that loses value, depreciates, as opposed to property which appreciates. I mean, I'd rather do that, but I guess that's a
Well,
discussion for another
Great,
meeting.
great question, but we don't have money for either, that's the problem. We don't have cash, so $812,000 capital improvements on a city, 91,000 people, significant amount of buildings and infrastructure. We don't have the cash to, we don't have the cash to do either. So we're bonding the fire apparatus plus the garage. And what we're trying to show here is you're gonna have to ration, if that's the right word, your bonding choices. And we're recommending that you do the schools, because they're already under construction, in 25, and then you get, for the out years, you have like 40 million. That's probably reasonable, depending upon your choice, but you've got a lot of choice. That, what Alderman Jettie and I ranked is a significant amount of.
So last night I mentioned that as of September of '25, Lord willing, the creek don't rise, we're done with building and modifying schools for a while. So, but we have to look at fire stations, repairs, and maybe a new station to make sure the coverage is within the time limits associated with their specifications. So
Right.
that's things to come, but not tomorrow. Yes, Ms. Linder?
I have your answer. Okay, so schools, we are using 18.1% of our debt limit. And for the city, 68.9%.
Okay, so-
City was 68.9% and school was 18.1%.
So I guess what I was looking for, I
I'll
mean, the
still send a
limit
note though.
on school debt is 6%.
Yep.
And what's the blue line?
The blue line, yep, the blue line is for schools, we're 18.1% of the 6%. So we're at almost 20% of the 6%.
That's of the 6% by city ordinance, not the 7% allowed by the state.
So the percent of the legal debt limit used for schools is 18.1% of the 6%. And then for city is 68.9% of the 2%. And I can also send that in an email.
The good thing is when we build schools now, they're gonna last more than the 20 years of the bond, that's for sure. We build them to last 50 at least. And Elm Street is in its 99th year. No, I'm not gonna make any comment.
Ms. Linder, you're gonna email this as well?
Yes, Donna has a copy too to include, and I emailed it to Donna as well. Yes, so I absolutely can do that.
Thank you.
I have a couple extra copies.
Yep, I
Everybody
have a
have
couple extra here too. I didn't know how many to bring, so. Yes,
And-
Thank you.
absolutely.
and,
Yes,
just-
Alderman Jettie?
Yes.
Yeah, so for the city debt limit, you said, we're at what percent again?
We are at 68.9% of the 2%, so almost 70% we've used up.
Okay.
And I'll email it to you. I'll send it out so you have it, so you.
Yeah, and the number fluctuates as we pay off the debt, so, and as we add new bonds, you know.
And this is as of the end of fiscal year 2022. So I'll have a new calculation as we get to the end of fiscal year 2023.
Okay, thank you.
You're welcome.
Any other questions? All right. Any other questions for finance in general? Seeing none, Alderman O'Brien.
Thank you. Mr. Chairman, I'd like to make the motion to table R23-125, which is the pending budget.
Motion is to table the budget R23-125. All in favor signify by saying aye.
Aye.
Opposed? Motion carries. Okay, general discussion. One thing I'd like to point out is, and I want feedback on this, probably not tonight, but for the public hearing, last year we got into people back and forth. I think this year I'm gonna let people come up and ask the questions they have for that particular division. But when they're done, till the next division. They can ask questions in the next division, but not the back and forth like we ended up last year. If anybody has a problem with that, let me know, but I think that's the way we're gonna run it this year. Doesn't mean you can't ask questions, they gotta ask them for that division. They come up once, ask their questions, and if they have any left over at the end, they can add them at the end of our presentation. That way, we're not having 75 city employees sitting there for hours. Not that it was that long, I don't think. But anyway, as each division gets done, their employees leave. So it's not restricting anybody from asking questions. Yes, Alderman Jettie?
Yeah, I'm not sure how I think about all of that, but the question that comes to my mind is if somebody asks a question and they get an answer and it doesn't answer their question, they don't have a right to follow up.
No, they can ask another question. I'm not saying they get only one question. I wouldn't do that. They can just ask, if they have a question, they have a follow-up question, they can ask it then. But once they're done asking their questions on that division, they sit down. And they don't come back up for that division again.
So if I have a question about the fire department, I can only ask questions about the fire department. And then,
That's always been true.
right, but what you're saying is if there was a leftover question from general government, then they can't ask it at that point once it goes.
Not while we're going through the other divisions. They can ask it at the end, before we wrap up.
Yeah, I need to noodle on that a little.
Alderman Karen.
Oh, thank you. I just want to thank you both for your presentation tonight. I appreciated the handouts because that really helps. And all the information that you'll send to Donna to send to us is really going to help. Because in all my years as an alderman, this is my first time on the budget committee. So it's a lot to process that much. So thank you, I appreciate that.
Will you be back?
Any other general discussion? And I brought that up so people have a chance to think about it. We got a long way before that. Now, public comment, there's no one here, so none. Remarks by Alderman. Alderman Tebow. Looks like the planning board got through before we.
Yeah, thank you, Mr. Chairman. I just want to say thanks for having me. And thank you for them. And, it was great at least hearing the bonding part of that. So I think I came and got your presentation early so I could read it while I was snoozing up on the planning board. But thank you.
Okay. All right, Alderman O'Brien.
Thank you, Mr. Chairman. I would like to make the motion to adjourn.
Motion on the floor is to adjourn. All in favor signify by saying aye.
Aye.
Opposed? Motion carries. We're adjourned at 9:37. No budget.